You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means it is Thursday. It is 1:30 p.m. Central. It is 2:30 p.m. Eastern. Do you know what's popping off in the world of futures options? Well, you know what? Came to the right show. Let's find out together. My name, of course, Mark Longo from theoptionsinsider.com, as well as from the network that continues to grow and evolve. New shows popping off all the time. European Market Brief hitting our pro folks yesterday. Should be hitting the network sometime soon on the on-demand side. Of course, the hot options report coming at you every day after the close. So make sure wherever you're getting this show, you're getting the full network feed. That's a whole bunch of great goodness coming at you. And of course, speaking of goodness coming at you, including great giveaways, congrats to our pro member, Mr. Meats with a Z, for winning the August Pro Trading Crate. Get your name in the hat now for the September Pro Trading Crate. Of course, if you were a pro member, you already heard a lot of those aforementioned shows. You got early access to Mr. Overby's very actionable butterfly trade on gold and a whole bunch else. Options oddities coming to you after Vol Views tomorrow, pro Q&As. All sorts of fun. TheOptionsinsider.com/pro is the place to go to learn more as we learn who's joining us on the old TWIFO program today. And I laugh, I chuckle, listeners, because we are bravely venturing back into the void, into the fray, dare I say it, into the danger, because last week we had this person on our show and everything melted down out there. The gremlins, everything took over, and pretty much by the end of the show, nothing was working. So by having her back on again, we are spitting into the eye of the hurricane, laughing at danger, saying pshaw to curses and bad luck. That's how we roll here on the show, because for the second time in 2 weeks, we are bravely venturing forth and welcoming back our good friend, Miss Carley Garner. Carley, are you there? Can you hear me?
I am here. I can hear you. Right. So far, so good. It feels like a little bit of deja vu.
We passed the first test.
Better, we'll cross our fingers and hope for the best. To be fair, it's not you, it's me. I have the worst. I actually have both the best luck in the world and the worst luck. So it's all me. I'll take the blame.
Having some rough luck on the gridiron last couple of weeks, Miss Garner. What's going on with the hot what is it? The hot commodities and options. What is your name?
Hot Commodities. Yes, that is my official fantasy football name. Actually, I think I won by like a tenth of a point.
Oh, did you pull it out at the end? Last I checked.
Yeah, but it was so tight. I've never seen anything that tight in my life.
You're gonna hate that probability meter. It goes crazy for your matches. I know it did for ours.
It really does.
99 up 0 up 99.9 up 0. It can be deflating and exciting, exhilarating, all at the same time, just like this show, listeners. So let's see if we can make it through the entirety of the Movers and Shakers report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers report.
All right, everybody, let's get down to business with the Movers and Shakers report. And as you recall last week, listen, this is pretty much right where the show went off the rails. And we never recovered. So we'll see. We'll see if we can make it 2 for 2 this week or if we fight our way back. If you follow us on social media, if you see this chart we tweet out right before the show, you would see that this week we are pretty much biased towards the upside out there this week. I would say we're roughly 60-40, maybe 65-35 green over red. The light side, also the owner of the largest percentage mover over there at CME for the week. Can you take a guess what that might be, listeners? It was Fed week, but the actual product may surprise you. So interesting stuff out there. Before we get to the Movers and Shakers, really quickly, Carly, as I mentioned, it was Fed week this week, so a lot going on in the markets. What were your thoughts on what we heard from the Fed and the market's reaction, Matt?
There's a lot of comparisons based on, basically, we're going into an interest rate cut cycle with the stock market at all-time highs. We really have only seen this one other time, or at least in my lifetime. I'm sure that I'm old, but I'm not that old. So I'm sure it's happened before. But the last time I recall it is going into the financial crisis. And the market celebrated the lower rates in the beginning. But right after the first rate cut, I think it was a couple of days later, the market started to melt down. So I have it on my radar that maybe we get a pretty good pullback here in the next couple of days, just because I believe the market has priced in these interest rate cuts. To be honest, we've been talking about these for 2 years, and now we're finally getting them. And
that's what I don't get. We've been pricing these in for 2 years. We've been rallying for 2 years. We finally got a quarter point. Is this what we've been doing?
Exactly, and it's only a quarter point, and they're only talking about maybe a couple more. To me, I feel like it's a buy the news, sell the rally. And I know we haven't sold off yet, but I will remind everybody the September contract is expiring in the morning, and it's very common. It's not guaranteed, nothing is, but it's very common to see the S&P peak out at expiration of a contract and then start. So in other words, what I would expect is probably a little bit of short squeeze overnight and into tomorrow morning. But as soon as that September contract comes off the board, history suggests we probably start to get some weakness. So that's what we're looking for. But, we will see what happens.
Sometimes I feel like the emperor has no clothes. I'm like, these are the rate cuts we were talking about a couple of years ago. We got 9 months. We've been rallying nonstop for 2 to 3 years off the base of this. And we got a quarter point, and this is what you give me. You rallied hundreds of handles just a few weeks ago off the Jackson Hole speech for these same anticipated rate cuts. So these have been baked in and then baked in. I think the pie is just scorched by now. It's done. The pie is done. Baking in the rate cuts out there. But, Carly, I started off the show saying we are laughing at danger all the way through the show. This is where I tossed you last week, and things just immediately imploded. So do I dare do it again? That's the question I am asking, and the audience is asking. Do we trust the technology gods and the systems in place? You think you can handle a little light side and dark side, or am I flying too close to the sun?
I think we've got it handled. All
right. Then I will trust you, madam. Where do you want to start?
Let's go light side.
All right, have at it. The floor is yours, at least until it melts down around our ears.
All right, so coming in at number 5, we have SRW wheat up 4%. So that's soft red winter wheat. That's Chicago wheat for anyone that doesn't know. HR hard red winter wheat up 4.5%. That's coming in at number 4. Corn up 6.2% for the week. It's given some of that back today, just as a disclosure. And we have lumber up 8% on the week. I will also mention, lumber has been so beaten down. An 8% rally is actually just probably noise. I'm not sure it's as meaningful as it sounds. And the last one is oats coming in almost 10% higher on the week, 9.78. But I do have a disclosure here. I think that the system, I know that you're pulling this data from other sources, and it's not wrong data, but this is a little misleading because what happened is we switched from the September contract to the December contract, and there's like a 25-cent difference between the two, and it counted that as a gain as opposed to basically just the difference in contango. So if you look at December oats, they're only up a few pennies on the week. So be careful.
The fun of constant maturity versus rolling front month futures, right? All the challenge in data out there, listeners, in tracking. It's not like a stock. It's not quite as easy to track. In fact, we did a whole show about this almost a year ago on the Futures Rundown, which to me is still the new edition on the network, even though it just celebrated its 1 year anniversary, where we talk about the difference between the constant maturity future approach versus the endlessly rolling front month future. And kind of when you do the latter, sometimes you encounter issues like this. There's no real right way or wrong way to do that. Each has their own pluses and minuses, and you're seeing some of the drawbacks of the latter right now. Well, Carly, we made it all the way through the light side, and so far, nothing's on fire here in the studio, so let's go for two.
Yep. Okay, let's do it. Just one other thing about that. Yeah, I'm not criticizing the data doesn't lie. It's just important that we understand what we're looking at when we do read.
I'm going to tell Nick you said his data is garbage and that his system is broken and that he should be embarrassed. That's what I'm going to tell him. After the show.
Not at all. I just want to make sure people understand what they're reading here. Okay, let's go to the dark side. Dark side coming in at number 5, consumer staples down 1.34% on the week. Healthcare at number 4, down 1.78% on the week. There's a note that says this was number 4 to the light side last week, so that's interesting. Basically, just giving back everything it gained last week. Soybean meal down almost 2%, 1.94 on the week. Materials down 2% on the week, and the number 1 on the dark side is platinum, down 3.78% on the week. I'm a little surprised. Is it common for the like consumer staples, healthcare, those types of contracts to come up on these lists? Because they're not a lot of people trading them, but obviously they're moving. Not
very active, and unfortunately, you're right. Yeah. Not really a big option stalwart. But if we pulled a lot of the non-optionable or just don't do a lot of options flow out of these lists, they'd be kind of short lists. Lumber wouldn't be there. Oats wouldn't be there. Healthcare, all the staples wouldn't be there either. So we'd be removing quite a swath out there. We like to give people a representative sample, but you're right. It is challenging. In fact, someone wrote in yesterday asking on the Futures Rundown show which products on the futures side really flummox or mystify me the most. And I went back to oats and lumber for this exact reason. They are dominating our movers and shakers again this week. And if I go pull them up right now, maybe we'll get 3 contracts on the options side. It's just, they are mystifying to me how much they move and how little actual options paper. It's wild to me. 2021, lumber was the most volatile asset on the planet. Dead trees. Forget crypto, forget meme stocks. It was dead trees. And yet you couldn't find anybody slinging options on these things. I don't know. Wild products to me, Carly. I don't get it. All right, you did good. So far, again, I smell a little smoke, but I think we're good. So we can keep rolling here as I keep going, listeners, here to the CVOL movers and shakers, which again, you folks can run this for yourselves. Type CME and CVOL into whatever browser you're running. That will get you to the dashboard. You will have to log in or create a CME account. It takes 2 seconds. It is free. And then you go to your high-low range, set it to 1 week, and then go to the aggregates tab. I mean, it's all you. If you're doing it on your own time, you can dig deep into whatever sector you want. We don't have time for all that on the show, so we just go for the aggregates here, listeners. Now let's kick things off in the metals this week. Metals, kind of interesting. In fact, if you listened to our Futures Rundown, our guest yesterday on the show pretty much thought that maybe, at least for the time being, that the Fed had stuck the knife in the precious metals out there, in particular gold. He didn't expect any new all-time highs anytime soon. The metals reflecting some of that spice right now, listeners. Metals aggregate CVOL 1944, up 0.6 of a point just today. That is the high for the week. The low 1716. So metals, again, in aggregate, metals not a bastion of volatility, gaining over 2 points, nearly 2.5 points, about 2 1/3 points on the week. That is nothing to sneeze at out there in the land of metals vol. So metals looking spicy. Interestingly enough, metals gaining vol every day this week with the exception of Monday. So things getting spicy and metals vol not coming off after the Fed. If anything, getting spicier out there, which is kind of interesting. To the aggregate commodities C-vol we go, 32.05 right now, up about 0.14, so not a banger day out there. That is the high level for the week, the low 31.13. So pinning the needle to the upside this week, but obviously a much less crazy range out there, only about a little under a point out there for the commodities aggregate C-vol. Below we have the energy C-vol, 46.66, off 0.12 today. The low actually came yesterday, 46.29. The high, 47.05. So kind of hanging out right in the middle of its weekly range out there. Then we keep on rolling to the ag products listeners. 1918, a terrible year, and also not a great day here, off 0.2 out there today. That is the low for the week, the high 1963. So coming in at the bottom of its weekly range. So we got kind of a tale of two tapes here. The metals and the commodities pinning the needle to the upside. Energy kind of splitting the uprights. And then we've got ag products and some of our others coming back to the downside, including the next one, which is the treasuries, treasury price vol. Go figure. They are hitting treasury vol post-Fed. That's kind of how it's supposed to work. 479 off 0.27 today. Only one day did they gain this week, and go figure, it was Wednesday. That is the low for the week, the high 5.11. So not a huge range, but again, it is treasuries. You're not starting from a high baseline. And we were saying for a while, we were saying last week on volatility views, we were saying last week on this show that it was kind of strange that folks were just so willing to crush vol across the board, in particular in treasuries heading into the Fed. I mean, if you looked at the Fed watch, it seemed like a certainty that we were getting a cut, but you never know at the end of the day. We've all learned and seen many surprises just over the last few years on things that seem to be certain on the surface. So crushing vol pre-Fed, kind of strange. Post-Fed does make some sense. So that's what we're seeing out there right now. And then below it, we have the FXC vol, a tick under an 8, 7.96, off nearly half a point today. That's a big move in FX vol in a day. Wow, 7.11 is actually the low, the high 8.41. So coming in nearly a half a point below the upper band for the week, but over a point, 1.3 point range on FX vol. And then at the bottom of our list is the Treasury yield vol, 90.87, off almost 4.5 points today. The range for the week, 86.12 to the downside, 95.35 to the upside. So kind of hanging out towards the upper middle portion of that range. So a wild week in C-vol, some gainers, some losers, some coming right down the middle. All sorts of fun going on in C-vol. But Carly, we talked about a lot of products and complexes already. We got some stuff lighting it up this week in the ags and in the metals out there. We've got some vol action in the metals as well. But you are the guest. I will let you choose. Where would you like to start our journey this week?
How about metals and specifically gold?
I was just going to suggest that. It's like we're on the same page here as we keep on rolling right on into the metals.
Werewolves beware. It's time to explore the options activity in silver, gold, and other shiny things. It's time to talk metals.
All right, everybody, let's get into the world of metals. You know where to go to follow along with the show, cmegroup.com/TWIFO, TWIFO. Once you're there, go into that drop-down, listeners. In the asset class, you're going to go all the way down to the bottom of the list. It is an alpha order list to metals. Then I'm going to kick things off in the precious, which is, of course, gold. But really quickly, I'm going to take a quick sojourn into platinum, because when everything melted down last week on the show, I did take a quick sojourn out there. It has been moving quite a bit. It's our number one mover to the dark side this week, off 3 3/4%. And worth noting, is starting to put up more paper. There was a time where platinum was really an also ran, not quite oats or lumber, but really not putting up a lot of paper. It is slowly starting to change that narrative. I mean, it's not the euro dollar or the 3-month SOFR or the E-mini yet by any means. It's not even silver. It's about 5,000 contracts. But for platinum, that's not nothing. So worth noting, platinum right now, 14.19, off about 0.5% since Monday, since our show last week, nearly 4%, and putting up nearly 5,000 contracts this week, with the hot contract, the hot option out there being the 1,200 puts in January. So they have 90 days to go. And that front future at about a 14.20 right now. So pretty far out of the money puts, about 220 handle out of the money puts. Lighting up the tape in platinum, which is probably has to do with the fact that it's the number one dark side mover this week. But all right, to the world of a more common precious metal, which is gold. Go figure. We've been in some rarefied territory for a while, listeners. S&P hitting new all-time highs and gold hitting new all-time highs, and it's not really how it's supposed to work. You don't have gold in your portfolio to play that role. That said, you're not mad at it. If you're long equities, long gold, you had a good little run here. But that said, that's not the way these products are usually supposed to go down. And going down they are right now. Gold off nearly 12 handles, or about 1/3%, since Monday out there. If we look at our chart here really quickly, let's see if I could find gold. Gold actually, from our show last week, is almost literally unched. It's only off 0.16%. So kind of much ado about nothing net in gold, even if we are coming off some of the all-time highs. But Carley, I want to pick your brain on gold for a little bit because it is a fascinating topic. Like I said, our guest yesterday on the Futures Rundown kind of speculating that this is it for gold, that the Fed kind of stuck a knife in the back of gold, and we're not really going to see any more all-time highs anytime soon. Are you buying that same argument? Are you feeling that as well, Carley, or maybe you thinking there's more upside?
No, I agree with his theory. I've been bearish gold for a little while now, and I'm taking a lot of heat from people on this. But the reality is, gold's really been, since the April blowout, we've really basically been trading sideways. So has gold sold off the way I expected it to? No, but I'm going to say it's struggled. I know most people are going to say no, it hasn't, but it basically went parabolic and traded sideways for several months. And then we've had this little last hurrah. I think this is a last hurrah rally. There are some arguments out there that in previous interest rate cutting cycles, gold rallied, but this one's different. As we've already talked about on the show, we've been anticipating this for years. This is not a surprise. The last couple of times were surprises. We had COVID. We didn't know we were going to be cutting rates until suddenly we're cutting rates. So this is a whole different ball of wax here. And everybody I talk to is bullish gold. If you even hint at the idea that maybe gold has, might not go up forever, people get very upset. So we are just at maximum bullishness, maximum positioning. The dollar I know has looked like crap the last couple of days, but I think the dollar's putting in a double bottom. So don't be fooled by these sorts of things. Bottoms are a process. Bottoms don't happen in one day. Sometimes it takes a few months for everybody to work it out. If the dollar bottoms, gold is going to be toast. And I'm not talking about a small pullback. I believe gold probably sees a substantial pullback. And I'll say one last thing since we're talking about volatility. We've been of the opinion that gold is a better sell than a buy for quite a while. And so every time we get a gold rally, we sell calls, we buy puts, and the vol has been crushed. I know it's at the top of your weekly list, but if you look at a bigger picture, it's just been annihilated. Like, for example, we've been selling 4,000 calls and buying them back and selling them again and buying them back on every rally. And just today, they've lost half their value on a little pullback in gold. You don't usually see that. It usually takes a little more time for that vol to work out. And our long puts, even with today, gold's down 42. Our long puts have not picked up any value whatsoever. They're literally exactly what they were worth yesterday. So this is a massive vol crush. And I think that's going to work against the bulls. I think that's going to actually suck prices down. So we'll see what happens.
So you're the one slinging all these 4,000s today. That's you, Carley. I was just looking at those on my screen. So
well, we sold them too early, but so we'd probably be buying them back here in the next couple of days, hopefully, if we're right.
Were you like me? Were you starting to get the heebie-jeebies? Was your spidey sense tingling? Were the hairs on the back of your neck standing up when we kept repeatedly making new all-time highs, both in the S&P and in gold? I mean, refresh my memory, but it's not supposed to work that way, Carley.
It's not. Okay, I thank you for bringing that back up. I've been on social media talking about this, and I wrote on our Substack, gold is not behaving as a risk-off asset. Gold is a risk asset. It's following the S&P, it's following Bitcoin, so which is fine as everything's going up together, it's fine if you're long. But what the problem is here, people are buying gold because they think they're diversifying from risk. They think if they start buying gold and Bitcoin and the stocks roll over, they're going to be fine because they own gold, and it's not going to work that way. I could be wrong, but I've seen this type of thing before. Gold is a risk asset. It is not a safe haven. Please don't treat it as that. It will go down with stocks when this happens. Everybody's going to hit the sell button all at once. And that's assuming maybe we never see these assets ever sell off again. Maybe they just keep going, but I doubt it. If you look at charts from 2020, basically the last 5 years since the pandemic, when we flushed the entire global economy with too much cash, these three assets started behaving as if they were the same type of asset, risk asset. So be very careful if you're buying gold because you think it's a diversification tool. It probably won't be.
I'm glad to see I wasn't the only one that was getting a little creeped out by all that out there, Carly.
Yeah.
We are of like minds on that. Let's see what the market was up to out here in gold. Was it a banger week in gold options? The answer was yeah, listeners. Fed week usually tends to do that out there. Usually we see gold 220, maybe 250,000, 250,000 contracts if it's getting pretty spicy. Nearly 350 on the tape this week, 341. So the Fed definitely bringing the heat out there. Looks like about 30% of that paper was going up in the OC contract. It has about 7 days to go. We'll get there in a second, but I want to look at some of these others out here because Carly was just talking about the 4,000s, and that is actually our most active contract of the week. The DEES 4,000s taking the top spot, 11,600 contract, which is also kind of interesting. Usually we see a lot more paper flowing into one contract. This week it's very spread out. It's kind of all over the place, which kind of reflects maybe some interesting diversity of opinion out there in gold. But let's go out to DEES really quickly. And getting back to Carly's point, these vol numbers are starting to look kind of anemic. I mean, everything 1 week and less is trading at a sub 14. The 5-day contract's at a 12 2/3, which again, even by gold standards, gold not trading at a triple digits on a vol perspective, listeners. Even at that lower standard, that's still pretty low for gold vol. So I kind of see what Carly's putting down here. If you go a little bit farther out to DEES, that's just ticked below a 15, a 14.98, off about a third of a point in the vol. So again, things getting kind of not, I won't say low because gold can always get lower out there. But again, one of those moments where you want to make sure the juice is worth the squeeze if you're blasting away at options. Skew-wise out to December, normally we see a bid to the upside in metals. That's starting to get a little iffy right now, but it still exists in December. 4.6% is the bid to the upside. The puts 3.3% discounted. So we still have that bullish skew bid to the upside. It's a question of, how long can this persist? If we look at some of the narrow dated stuff, that's obviously pretty flat at this point. It's kind of a 50-50 crapshoot which way that skew is going. But the 4,000s, like I said, that's what caught my eye as the number one with a pretty small bullet, more of a BB out there this week. Again, a little bit shy of 12,000 contracts. The big day actually today, nearly 8,000. So Carly was busy trading it up before she came on the show. 7,700 of these bad boys going up today. So you know me, listeners, I had to do a little digging to see exactly what kind of prices we're looking at out here. And these things are trading a lot, not just straight up, but as a part of a bunch of spreads as well. Straight up, the DEES 4,000s were trading today for about average price of about 18.20, 18 and a quarter. So I'll leave that up to you. 4,000 in gold. By the way, that DEES future 36.74. So yeah, I mean that's a pretty far way out of the money. But then again, if you're on the upside train for gold at this trajectory outside of these last couple of sessions, you can obviously hit that before December. So interesting stuff out there. And then we also saw trading quite actively in a bunch of spreads, including a February DEES 4,000. Looks like a calendar went up for $2.50, couple of thousand times just today. And then we've got what looks like a DEES 3,800 4,000 vertical going up about 1,000 times today as well. So the 4,000s are involved in everything today. By the way, if you're wondering, that vertical, that 200 handle vertical, $36.40 if you're intrigued by that. So Carly, I guess you're in on the hot option of the week, DEES 4,000s. Take them however you want. You want them as a DEES Feb calendar for about $2.50. You like them as a 38 4,000 vertical for about $36. Or do you like them straight up for $18.20, Carly? Sounds like you were selling them. So you go the latter portion.
We were selling them, but we've been selling them on rallies. So, I mean, these things, you'd be surprised. In April, these things were worth $100. And I'm not, that's not a typo, but we've sold them multiple times and for the $25 to $30 or even a little higher. And they, So our latest sell was in the, let's see, closer to 20. So we'll see. We'll probably, if we get another day like this in gold, we'll probably just buy them back and take our money and move on.
People were paying $100 for the 4,000s in December back in April.
Well, my guess is those people were probably short before Liberation Day, and they probably sold them like in low vol at low prices, and then they just either ran out of money or just couldn't take the pain anymore, and so they were forced to buy them back. But that would have been a really tough buy right there, because gold's now, this is the highest roughly, I mean, a few days ago, but we're at all-time highs. So gold has never been anywhere near 4,000 yet. People were spending 10 grand on options that far out of the money. Silly.
That's some serious skew effect kicking in there. My goodness, $100 for the 4,000s. For frame of reference, listeners, down in April, we got to the nadir of sub 3,000 in gold, around 2,900, somewhere in that range. So you're talking well over 1,000 handles out of the money. Granted, you had some duration there. You had over half a year, but is that worth $100? I don't think so. So, wow. Yeah, sold to you, Carley. That's a good sale. Obviously, in hindsight, it's an excellent sale. But even at the time, I think most people would have been willing to sell the 4,000s in December for $100. There's a lot you could do between April and December to hedge that if you needed to. Out there.
Sure. Wow. Definitely looks good on paper.
Wild
for sure.
stuff. Any other last thoughts on gold before we look at the number 2 out here, which is silver?
Yeah, I mentioned it before. The puts are actually pretty cheap. If gold rolls over here, for example, the December options have 67 days. If gold rolls over, we could very easily come back down to the bottom of the trading range we were in before it broke out. That's going to put us somewhere around 3,200. And go look at the option chain. You can buy you could buy strikes in the 3,300 or below for less than $1,000. I think it's worth a shot.
I don't hate that at all. I was looking at that skew right now, and puts in metals are always notoriously cheap. But even right now, I mean, I get it when they're cheap when we're making new all-time highs. But now that we're maybe teetering on the bit of a precipice, you might see a little bit of a bid creeping into those puts, and we're not quite seeing that yet. So yeah, interesting. There you go.
60
listeners.
days is an eternity in gold.
That it is. So if you're feeling that, I see some folks in our chat saying, Option God says he thinks gold is toast. Well, if you think that, then those puts are not exactly rich to express that opinion out there, Option God. Uncle Mike is not here, but we'll hit his beloved silver really quickly here as well, because, you can't really talk the king of the precious without talking its subordinate, its number 2 out there, even though it is outpacing gold in performance for the year. Silver hanging out right about exactly a 42 right now, giving up about $0.75 from where it was at the start of the week. If we go out to the end of our show last week, it's off about 0.5%. Putting up some volume this week, though. Usually we see silver somewhere in the 35 to 50,000 range if things are really active. Putting up 60,000 this week, so that's a pretty decent clip for silver. And 30% of that, that's the largest chunk, going up in the OCC contract that has 7 days to go. So we're going to hang out there. What is silver volume, you might be asking? Also coming back to earth. 21.5, off a little over 5, about 5.25 points, which again kind of makes it interesting. I need to go dig into this metals C-vol then to see what is bidding up the metals vol, because they are coming for gold vol and they are coming for silver vol. Those would think would be the two big dogs in the yard out there. So I'll have to go look at copper and some of the rest out there. But interesting stuff on the silver front. Before I dig into the numbers, Carley, have you been watching silver out there, and any thoughts for our listeners?
I watch silver from afar. I do believe that silver probably sees somewhere around 44. That's kind of if you go all the way back to 2011, that was kind of the last hurrah rally that we saw. After it peaked at 50, it sold off, and then it rallied back to about 44. So that's the kind of the area we have on our chart as a potential reversal area. But we're doing this as informational and educational purposes only. I wouldn't touch it either way, but it's fun to watch.
Very fun indeed, as we keep on rolling out to see what is lighting up the tape out here this week, listeners. Like we said, it's near dated contract that is doing 30% of the paper. But once again, the most active individual contract was going out to December, which is more like traditional precious metals paper. Let's go out there, listeners. That vol is at about 25.25, off about nearly $3 as well. So they are smoking this metals vol, which again, kind of interesting. I need to dig into that C vol a little bit to see what's driving it. The puts last week, 6.5% discounted. This week, getting cheaper, 8.2% cheap. The calls, 10.8% rich last week. This week, 9% out in December. and it's the 46 calls going up 2,263 times. That is your big dog in silver this week. Pretty much active Monday and Tuesday, about 1,000 each. Then the rest of the week kind of quiet, only 250 on Fed Day itself, and not a heck of a lot going up out there today. I was just trying to glance and see if I could find some prices for you on these listeners, but unfortunately not really coming up on my radar because they all traded on Monday and Tuesday, not today. So I have to do a little bit of digging, and we don't have time for that here on the show, listeners. So interesting stuff on these 46s. Again, 46 by December. It's kind of looking kind of like those D's 4000s in gold. That's a hefty move if you are intrigued by such things. But we've seen wild prints to the upside in silver before. If past is prologue, and if this skew is to be believed, and they're probably buying these bad boys out here, which again, it's up to you whether you think that's a good do or not, listeners. Maybe Uncle Mike might like. I think if I put that to Uncle Mike, he might even say silver's had a good run. 46, that's impressive out there. So we'll keep an eye on the metals. Carley, we talked platinum, gold, and silver. So we pretty much run through the metals. Where should we take our journey next?
That's a great question. Maybe everything's pretty quiet, but I guess we can go back to energies unless you have a better idea.
I'm always down to talk some of the Widowmaker and some crude, so to the world of energy we go.
It's time to tap into the deep options well of black gold, Texas tea, nat gas, and more. It's time to talk energy.
All right, listeners, to the explosive world of energy. You see what I did there, listeners? Go to that drop down, pop out of metals. You're going to go up 4 slots to energy. And then it's kind of, let's look at our movers and shakers for the week, listeners. We do have not a single energy offender on the list out there, which is a rare thing in and of itself. Last week, we had naught but energy, so it kind of shows you how the worm turns. WTI up about 1.7% since our last show. We got heating oil up there quite a bit as well, but heating oil not the most scintillating of options stories out there. Nat gas only up 0.14%. So you know what that means? We got to hang out in our old pal WTI. You know, we don't normally talk WTI during Fed week, but that's what makes it interesting. Sometimes we're going against the grain here, listeners. Going against the options flow as well. Usually we see 400, 450 on the tape in WTI this time of the week. This week, 350 on the tape, and hanging out right now shy of that 65 handle that I know Carley was talking about not too long ago here on the show. Hanging out right around 63 and a quarter in that front future. Actually up nearly a full point, or a little over 1% since Monday's show. And of course, you go back to the end of our show last week, they're up about 1 2/3% out there. So getting a little bit back out there, but for the most part, it's been a story of downward movement south of 70. Carley, what's catching your eye out there in the Texas tea this week?
Well, the fact that there's absolutely, it's almost, I'm not going to say zero, but there's very little volatility built into the options. They are wildly cheap. So if you're someone that is inclined to collect premium, naked or as a spread, I would say don't do it. This is not a time to be selling options in oil. This is a time to be buying options in oil. Now, the hard part is it's been going nowhere for a little while, so you may have to suffer a couple of cycles of eroding, assets and just watch your option go into pixie dust. But at some point, crude oil never stays quiet forever. At some point, it's going to break out massively. I suspect it's going to be the downside. I think, as I mentioned last time when I was on the show, below 65, oil behaves very badly, very, very badly. If you look at the November options, you can buy, this isn't a recommendation, this is for educational purposes, but you can buy options that are a couple dollars out of the money for literally $700-800. I'm old enough to remember. In fact, it was just 3 years ago. An at the money option in crude oil was like $15,000 to $20,000. I mean, that was at the extreme. That was when things were getting crazy. But my point is, for very little money, you can basically be long or short crude oil, a couple dollars away from the money. It's an amazing opportunity. You don't see this very often.
Interesting stuff. Let's see what we are seeing out there, listeners. And again, when the vol gets low, we always say make sure the juice is worth the squeeze if you are going to sell it. And it doesn't look like this juice is worth squeezing at all out here, listeners. Let's see what you folks are up to out here in WTI this week. We're not going out to December this time. We're going out to November, so we're going out about 30 days on this contract. And it's to the 60 puts where we are going this week, which is kind of talking about what Carley was just saying, how below 65, crude gets a little wonky. Looks like a lot of folks lining up on that 60 strike. In fact, actually, if we go 1 month beyond it, the double puts, the 55 puts, are actually stealing a slight march on the NOV 60 puts because 55 puts putting up 13,000 contracts out there this week in D. So I guess we technically have to start there, even though about 34% of the volume is actually going up in November, about 28% in December. So we can hang out there as well. Let's go to these D's double puts really quickly, see what's going on. By the way, vol-wise, like Carley said, getting cheap, about 29 and a third in that D's contract. If we're looking at November, it's about 27 and 3/4 off about exactly a point out there. So interesting stuff out there. In terms of skew, we are seeing the puts in December about 2.5% bid. The calls, nobody wants to touch them. Literally flat out there right now, which is listeners, which is kind of interesting. We don't see that too often. If you go to November, the puts are about 1% bid. The calls 1.6% bid. So a little bit more life to the upside in November than we're seeing in December. But like I said, it's these double puts in November that are leading the dance out here this week. 13,100 contracts. The big day was actually Tuesday, 6,700 going up on Tuesday. Looks like somebody decided to bail on a whole bunch of them right before the Fed did its dance. 3,400 on Wednesday, slightly opening then, and then almost 3,000 today, about 2,800. Let's look and see really quickly if we can get some prices on these bad boys. These D double, you know what? We have a bit of looks like we have a roll. We have that put spread going up 2,000 times today for 39 cents, the NOV D double put spread. So up to you if you like that as a roll or just a straight up put spread for 55 cents. I'm trying to find the prices on the double puts by themselves. Not seeing them there, but we are seeing also a lot of action on a strike. Probably more of you are thinking about 55. You might think that's a bit of a bridge too far, but the 60 puts by November, I can get behind those. And those were going up number 2 this week, total of about 12,100. Unlike the double puts in December, these were opening all week long. Somebody had an axe to grind all week. The big day was Wednesday, 4,000, about 3,000 today against an OI of 14,600. 2,800 on Tuesday, about 2,200 on Monday. Again, opening all week long. And these NOV 60 puts, let's see, these are going up for an average price of about 76 cents. So you're not getting a ton of duration, Carley, but you are getting a month, about 30 days, and you're getting a relatively decent strike. It's also a very psychologically important strike. You could argue if you break that, probably gonna drop through it a little bit. What are your thoughts, Carley? 30 days to go. NOV 60 puts around $0.75. Are you a fan?
I'm a fan, and I'm normally not an option buyer fan, but I would be in this instance. And I'll add one more thing. If you're someone that likes to be aggressive, this is kind of a rare opportunity to use options as insurance. So you could, instead of doing something like that, if you wanted to get aggressive, you could sell a futures contract and then buy a call because they're cheap. It's normally not, normally can't do this reasonably. You can buy a call to protect your futures contract and just let it ride. So it's an opportunity for those that like to stick their neck out a little bit.
Yeah, it's an interesting little flyer out there, listeners. Not the most expensive. You are getting some duration, not a ton, but then again, in this 0-day world, nearly 30 days is an eternity. Can we get to the 60 handle in 30 days in WTI if you're feeling some downside? Maybe that is your huckleberry. Carley, we are coming up against it. We probably have time for one more product and or complex. Where should we leave the folks this week? What is really lighting up your tape? We got corn lighting it up to the light side. We haven't talked ags in a while. Maybe there's a different ag that is floating your boat, or maybe something else is lighting up your tape, Carley.
We want to talk cattle again? Go to the unknown?
Go to the unknown. There we go. All right. We can do that. To the unknown, a.k.a. the ags, we go.
It's time to get our hands dirty exploring the latest options, trades, and trends in corn, wheat, soybeans, and more. It's time to talk ags.
All right, listeners, we'll wind things down at the top of our alpha order list in ags. And then in product family, we normally go to grains and oil seeds. We're going to go below that, past corn, past wheat, past beans, all the way to livestock. Listen, I know it's a scary tab, but roll with us. We were talking about this yesterday on the Futures Rundown. Both myself and our guests both said we are still getting little heebie-jeebies around the livestock. That said, they are doing a lot more paper than they used to. They're not quite the trade by appointment products they used to be. So even something like, I don't know, feeder cattle. Again, not for the timid out there, but it's putting up, 18,000 contracts this week. This used to be a trade by appointment product. So just something to bear in mind. You get in some of the other products out there, they're putting up even more. Let's look really quickly. Live cattle right now, 83,000 contracts on the tape. That's definitely a viable product. And lean hogs, nearly 70,000 contracts. So again, we were just talking about silver. Silver's not doing that. It's not doing what either of those contracts are doing. So bear that in mind if you're intimidated by these. They are starting to put up some numbers that are at least accessible for you on the options front. Carley, what is catching your eye in the world of the hoofs and the horns this week?
We've been doing a lot of feeder cattle trading, and the volatility is really kind of crushed. Just in the last couple of days, we've seen vol come out of the calls, because this is a market that's near all-time highs. We're a little off now, but we're still like at historically insane prices, and it's just been misbehaving all year. So the volatility and calls and puts were off the charts wild for a little while. They're finally starting to come back down to reality, but they still have a long way to go. So it's been an interesting market. I'll just leave it at that.
You know what we really need in our lives, Carley? We need zero DTE livestock trading. Then we know we've reached peak zero DTE. When you could sling a 0-day cattle contract or lean hogs, that's good living, Carley. I don't know about you. I'm excited about that prospect.
You know what? The CME they're in the process. I don't think they're quite released, but they just announced they're going to release Friday options in cattle.
Of course they are.
Because it's getting so much excitement, and you know how it goes.
It's all going there. It's all going 0-day, Carley.
I personally believe adding Friday contracts in a market like cattle that only trades for a few hours a day, I think that's probably the end of an era. I think the bull market in cattle's probably, put a fork in it, and we probably won't see these prices ever again.
It's like that. It's like everyone was saying back in Bitcoin back in the day. Once CME listed the futures, that was it. It was the beginning of it. You finally could sell, and that was going to kill it. And of course it did for a little while out there. So there you go. Adding the Fridays, you heard Carley say it. That's going to be, I do have some horror stories. I remember hearing when I first left the floor of the SIBO, I knew some guys who went out. I don't know why they did this. Some went to corn, which made a lot of sense. Corn is a very deep and liquid options product. But some attempted to go into the livestock options pits and the futures pits. And the horror stories they told me of just, I can't make heads or tails of this stuff. And, these were experienced, index and equity options guys, and it was completely foreign territory to them. So that still resonates in the back of my mind, Carley, whenever I think of these products. A very different beast, and we'll see. We'll be very different soon. How long till we get the rest of the week? Carley, if we get 0-day cattle, or is that it? Are you done? Is that just too much?
I think I'll retire. I think that's my cue.
That's the sign. When the kids on Reddit are talking about slinging 0 DTE cattle, then it's time to hang it up, Carley. It's gone too far. We've all gone down the rabbit hole. But feeder cattle, like we said, all this livestock, you add this all up, you're talking a couple 100,000 contracts across these complexes. So these are no longer trade by appointment products, and it's going to get even more interesting once we start adding Fridays into the mix. That said, we have a September expiration going away in about a week right now in the feeder cattle, so you're effectively trading a weekly contract right now. Anyway, you want to wait till next week, it'll be a daily. There you go, listeners, 0-day, all the fun in feeder cattle if you really want it. By the way, right now, feeder cattle, 358.40 in that front future. If we roll out and down the term structure, this is a pretty backward market here, which kind of reflecting what Carley was talking about here. Obviously, this thing has been popping off pretty crazily. You go out to next year, about exactly a year from now, that contract drifts down to about a sub 330, about a 328 or so. So obviously, very backward, reflecting a lot of price action very recently out here. And also, that's probably why 34% of this flow this week, this 18,000 contracts, is going up in the contract that has 7 days to go. That's where all the action is. It's backward as hell. Now, you might be asking, what is the vol in feeder cattle? And as Carley has pointed out, we kind of had the apex earlier this week, last week. It's kind of coming back to earth a little bit now. It's 11 1/3 off about 2.3 points out there this week. So again, we're not talking nat gas or Bitcoin vol, but still, it was looking a lot juicier a week ago than it is right now. Skew-wise, we are bid to the downside, not surprising, but maybe not that much. Only 3.5% bid and 1.3% discount to the calls. So a modest, I put modest, I underlined it, modest equity skew percolating in there. If we go a little bit farther out, if we go out to, let's say, January of next year, listeners, now that becomes much more pronounced. Those puts are about 8% bid, the calls about 5.5% discounted, and that future is much lower at about 340.5, just to give you some context for this term structure here, listeners, which is absolutely wild. And the hot option out here, such as it was the 350 puts. Remember I said we're hanging out in that front contract at a 358.40, and these have gone up about 400 times this week. So that's your big dog in the feeder cattle. 400 of the 350 puts. The big day was actually Wednesday. So Fed Day, not known for being a traditional driver of action in the livestock, but that was the big day in feeder cattle this week. Nearly 200 of these 350 puts opening. 70 today, 120 on Monday, and not much on Tuesday. By the way, it's nearly 1,000 open. Carley, 350 puts with about a week to go. Is that a bit of a bridge too far, or are you down for those?
As a flyer, I think they're worth. I mean, that's only $150, right? It's what could go wrong? So, sure, why not?
Famous last words. What could go wrong? But you know what? Last words, Carley. That means we made it. We survived our journey. We laughed in the face of danger. We spit into the hurricane. We stepped on Superman's cape and we survived.
We did.
There we go, listeners. So you thought we wouldn't make it, but we did. We flew very close to the sun. We got in danger a few times, Carley, but we survived. So I'm glad we could do it. Second time is clearly the charm. Well, I'm glad you could join us.
Indeed.
I'm glad the technology gods smiled upon us this week. Before they spit on us and knock us off the air, really quick, where should folks go if they want more Carley Garner in their lives? Or maybe they want to debate you about all things gold, because I know every time you talk gold, somebody comes out of the woodwork with an opinion.
Oh, they do, for sure. If you want to debate me, you can find me on X. The handle's at Carley Garner. If you want to sign up for a free trial of our newsletters or check out our brokerage service, go to DeCarleyTrading.com. That's spelled DeCarley. And also, we have a new Substack. So if you have no interest in opening an account with us, but you just want our newsletters, you can sign up for Substack and do it that way.
Man, Substack. It's like 2017 on the internet again. Everyone's going. Every time I talk to somebody these days, they all have a Substack. I guess I'm behind the times again. Everything old is new again, Carley. Substack. We got to get an Options Insider Substack. I guess we're late to the party. So there you go. Give us a Substack again.
It's the Substack is. I'm sorry, I should have it. DeCarleyTrading.substack.com.
There you go. Check them out. So if you want all of Carley's musings on gold and feeder cattle, of course, some nat gas is going to sneak in there. I'm sure it always does. And a whole bunch more. Check her out over there on Substack, or, of course, just DeCarley Trading, DeCarley Trading.com. Place to go to kick the tires and light the fires. And, of course, you know where to go to play along with this show, CMEgroup.com/TWIFO. They also have the CVOL there for you to kick the tires and light the fires. A lot of great educational content. Of course, research from the whole economic and academic team over there. A lot of great stuff. You can go down a rabbit hole, but it's a fun one. Make sure you begin your journey. CMEgroup.com/TWIFO, the place to go to get all of that fun data. Where else are you going to get free data about futures options, listeners? Literally nowhere. So you should check it out if you like these markets. That's going to do it for us on TWIFO today. Not going to do it for us on the network, though. I'll be back in about an hour to talk all of the wrap up for the day. And it was a hot one. Just on the option block about an hour ago, things were pretty wild. So we'll see if we can keep that pace up through the end of the day on the hot options report. Then I'll be back again tomorrow talking vol. Who will join me? We got some special guests lined up. Who are they? Got to tune in to find out. On volatility views tomorrow. And then, of course, coming back for all of our pro friends to talk options oddities after that, before we wind up the day and wind up the week with the final hot options report for the week. All sorts of fun stuff coming at you. Look forward to that. Then we're back again next week, all the way through to next Wednesday. Another episode of This Week in Futures Options. Stay safe out there, everybody.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.